Oh man, so Bitcoin got rejected heavily from the 45,500 mark. Now we're sitting at 43,500. Could that mean that we have a dead cat bounce? Should we be worrying and panic selling? Or in fact, is this still an indication of the end of this mini crypto winter that we've just seen? Let's take a look at the charts. We'll head straight into the Bitcoin chart and then we'll take a look at KADENA because KADENA's on the move as well. And a lot of you guys have been asking for an update on KADENA. So let's head straight here into the Bitcoin chart. And as you can see here on Bitcoin, a big move to the upside from 32 over the last handful of days. And you can see now we had really big moves over the last couple of days, but a bit of a red candlestick today. Let's head over into the Farley to find out exactly what is going on. And what you can see is we just, after breaking out from the long-term red resistance, we broke through every single horizontal resistance from 39,150 through the 40,000 psychological level. We consolidated for the whole weekend at 41,650 level, and then we moved. We continued to move, broke through 43.5, went all the way up to 44.5, and now we're facing the rejection from this candle wick at the top here at 45,521. I do see more downside here in the near term here on the 4-hourly candle. If I bring out the EMA ribbon, you can see here we've got some room to bounce down. So even if we use that EMA ribbon, collect some support from about 41,659, that's perfectly fine here. As long as we maintain higher highs and higher lows, right? So as long as we keep our lows higher, we could be good here on Bitcoin's recovery. Now, remember, these were important levels, guys. The fact that we're able to, you can see my arrows from yesterday's video, get above this high, and now we've just fallen below this high. We need to reclaim this one in order to continue our trend. But we're looking good here on Bitcoin. We cannot complain because we were in the midst of 32, and it just feels like, hours ago that we were at 32. But now we've had a good recovery here on Bitcoin. I mean, if we take the measured move from the bottom here, we can see that we've to the top there, that's the 38% move, and to about where we're at now, it's about a 32% move off the bottom. And this is why it's so important that you don't panic sell. So congratulations to everybody who saw this through all the way to 32 on Bitcoin, this mini crypto winter which we've had. Congratulations to you all for holding firm, for not panic selling. As I promised you guys, I was making videos on a daily basis reminding you to build conviction, stay in your high conviction play. If you have conviction, continue to dollar cost average, and now you should be seeing the fruits of that, because any of the coins you managed to pick up here at the bottom when it was bloody, when it was fearful, when fear and greed index was at 10 and nobody wanted to touch it, you're now 40% up on your Bitcoin just from that level, and obviously similar multiples of that on your favorite altcoins, right? So really interesting. And one of the things I wanted to look at, in fact, was you get this, conversation around these long-term bull and bear markets, but the reality is, having seen the one in 2021 now, and having seen this one at the end of 21 leading into early 2022, let's take a look at how long, in fact, it was. So this one, when it crashed down here, very crudely, nothing super accurate here, we were in the doldrums here for about 68 days. Okay, see that, guys? 68 days we were in suppressed pricing here before we got a good break to the upside, bounce off, and we started moving back upwards. Now, in the period we've just had here, let's take a look at this. Let's zoom in. And you can see our pricing was suppressed from about, let's say here, all the way across to this candle here. So you're looking at about 15 to 16 days of horrible. I mean, if you want to take it from when we fell below 40 even, which for me wasn't a massive retracement, but even then it's 30 days. So it's 30 days. And you can see now that these winters, these cycles that people like to call them, are shortening. Okay, we're seeing evidence of these shortening cycles. We're not seeing these super prolonged bear markets that we would have seen historically on Bitcoin. We're seeing those cycles shorten. If you've not watched my video, I did do a video breaking that down. I think it was called Crypto Winter, where there's some snow in the picture somewhere. I'll try to link it up here for you guys to see. But these cycles are definitely shortening, and they're not happening with the depth, the 90% retracements and long for a full year that they were happening before, which is great because it means more opportunity for us, but it also means we need to be prepared because the next one could be around the corner. Okay, so this could be a really quick run up to 100, 120, 130,000, and then another 80% fall, 70% fall, and that's what we need to keep an eye on now on Bitcoin. But first things first, let's bring out our EMA ribbon here on the daily. And as you can see, very importantly, we did get the close yesterday above our EMA ribbon. We have now officially flipped bullish here on the daily chart, which is really good. You know, I don't need to show you guys again the evidence of how quickly we move once we get a close. So now you just expect a little bit of consolidation here. Feel free to kind of retrace into the EMA ribbon a little bit, and then I want to see a big candle move to the upside, break through 44,500, start heading towards 46,987. Let's call it 47,000 here from this line. Really important line, because as you can see, that's where the price had some important action dating back to this ascending wedge and also this period here. Okay, so we do need to keep an eye on that for Bitcoin. Let's take a quick look here at the fear and greed index. And as you can see here, the fear and greed index is on 45 now. Okay, this is now neutral for the first time in a long time. If we head over into the chart, you can see now we've now surpassed the period where we were in December, and now we're getting to territories of where we were in November. Okay, so this is a good sign and showing that the market is starting to stomach all of the FUD and start to move higher. Now let's also look at the wider stock market, and you can see it's been a green day today. The Dow Jones is up 0.6%, you got the S&P up 0.4%, and you got the Nasdaq up 0.7%. So that's pretty interesting, considering we're now about 48 hours away from the CPI reading. It's really interesting because I'm expecting a lot of volatility over the next kind of 48 hours as the market tries to second guess. Traders start to come in to see how are they going to trade the CPI data. Remember, expectations for inflation are coming in at 7.2% by economists. Anything higher than that could see a retracement in risk stocks and Bitcoin. Anything lower than that, which is evidence that the market isn't heating up as much as maybe Jerome Powell had thought, may give us a clue that maybe we'll just see the one interest rate hike of 25 basis points, and then we could see a rally in growth stocks and also Bitcoin and therefore altcoins as well. Okay, so really important data coming out in 48 hours, and it's coming at a critical time, guys, because right now we're in a delicate position. We still need to create our higher highs and continue to work our way through each of these horizontal levels slowly but surely and build support along the way. But if we get some horrible inflation reading, that could really undo some of the work which we've done here over the last couple of days on Bitcoin. So we need to be cognizant of that. Not everything is green and happy, but you know, from the fundamentals, things are looking really nice here on Bitcoin. Let's also take a look at the weekly for full for just holisticness, right, to see all the different timeframes and to see if there's any confluence. And what we can see now is we're coming to a critical point, and that is the EMA ribbon. Now remember, this EMA ribbon, when you're below it, can act as resistance. Very important, this, guys. And look, where did we start getting the wick down on this wick? Where did the sell pressure start? Well, the sell pressure started from this level here, right? Which is where we saw at 45.5. That's because you're starting to penetrate the weekly EMA ribbon. So naturally, you're getting sell pressure to keep it away from the EMA ribbon. So don't be, you know, what the EMA ribbon will want to do is send you down here to create lower lows, right? But what we need to do is penetrate through our EMA ribbon, and that is what, and close above it, which is why 47,000 here, sorry, this 46,987 yellow line here is critical. A close above this line will give us a close above our weekly EMA ribbon, which means we can turn back into a bull market and get the good bounce like we saw here, where we closed above and moved to the upside, closed above, moved to the upside. If we go back historically on Bitcoin again, massive close above, massive move to the upside. That's what we want to see on here on Bitcoin. And it's setting up beautifully. Things are looking good. If we look at the liquidations, we can also see still a bunch of, you're getting 86 million in shorts liquidated, but now you're getting some longs liquidated. Now remember, this is what I was conscious of, guys. Remember, this is very important. Now that Bitcoin has driven beyond 40,000, you're getting a lot of that money that was on the sidelines trying to time the market back in. Everybody's now reading this narrative of, oh, the next cycle has begun, pile in, pile in. They want the free ride all the way to 69,000. But if there's one thing we know is the ride is not free and it's not easy. So everybody's waited for it to push through 40, put a 100x position, 30x leverage position. They're going to get liquidated. The bears will keep playing its trap. It'll keep doing dead cat bounces and quick retracements down, which is why it's important to have a long-term view and just hold. If this falls back to 40, if it falls back to 39, falls back to 37, it's fine. That's the bear traps, the bull traps, setting people up who are just aggressively waiting to ride this up to the top side, okay? So don't expect this to be all smooth sailing all the way back up to 69 and beyond. There's going to be a lot of retracements down, and we just need to build our support slowly but surely, build that scaffolding all the way back up, work our way through all the resistances and support levels which we lost, and critically get back to this green box, which is at 57 to 61. That's where the work needs to be done, because that's initially what created this downfall. When we lost that level, that was a sign of worse things to come. We kept falling. We just couldn't stop the bleeding. So on the way up, we need to make sure we've plastered all that properly so that we don't have these issues going into the future, right? In the future, we don't ever want to see 32 again. We want to create that floor at 40. We should never see lower than 40. That's the work that Bitcoin needs to do slowly but surely now. Now, let's also take a look at KADENA, which is an interesting proof of work concept, which a lot of you guys have been asking me to take a look at the chart on. And obviously, I can see why everybody's asking me to take a look, because it's had an explosive move. Now, is that the reason only for us to be looking at investing? Well, the important thing is we can see here, from here, we've had a good climb to the upside. Obviously, with Bitcoin having its massive wick and sell pressure today, we're seeing the same in all the altcoins. You've got KADENA still up today on a green candle, 10%, when all the other altcoins are pretty much red, which just goes to show the strength of the project right now. For me, looking at the Fibonacci ratios, we can set a price target here of $43 here for KADENA, but it's got a lot of work to do, right? It needs to get back to its all-time highs, which are sitting at about 28. It ran up really quickly to that level. I remember we covered it here on this channel. It had a quick run up to 28, and now it's fallen back. It had pretty much 100% retracement all the way down here to the downside. Okay, so we want to keep an eye on this, and we want to see where can we head to. The important levels for us at the moment is to get to a level of 13.6 will be a good level for us at the 0.382 Fibonacci, and then we can work towards 16.4. The important thing now on today's close over the next 7 hours for KADENA is it needs to close above its EMA ribbon. You can still see here it was bearish all this time as Bitcoin was continuing to bleed. It's now had a good move the last couple of daily candles. It needs to hold this candle. It's struggling right now. The bears and the bulls are fighting. We've got 7.5 hours to close this candle above our EMA ribbon. And if we can do that, that could set up a big move to the upside. Obviously, with any altcoin, particularly one which is a proof of work concept like KADENA, it's going to rely on Bitcoin getting a move on and really moving to the upside. But overall, it's a good project. There's good use cases in terms of KDEX, and we know the founding team are pretty solid with some ex-JPM team members as well. So definitely one to keep an eye on. The technicals are looking good. Key levels, like I said, get to 0.382. You've also got this big rejection point up here at 17.918. How quickly can we get back to those levels? And breakthrough is going to be important. Let's also look at the weekly for completion here. And you can see the weekly worked out pretty well here on KADENA. I mean, obviously, we've not got massive data to trade off of, but you can see here, in essence, this has just been a good retracement all the way to the bottom of the EMA ribbon, and now you're getting your bounce off that EMA ribbon. So there you go, guys. There is a quick update on KADENA and Bitcoin. Overall, the market is looking good. We cannot complain, guys. We were at 32, talking about numbers such as 29 and 30, but Bitcoin's managed to bounce. And for those of you who haven't experienced that cycle before, you've got to get used to that emotions. Like I said, these cycles are shortening now. There's less of these long, prolonged bear markets. I suspect we're going to get a whole bunch of these small, regular cycles, similar to what we had last year. That was only 6 months ago, where we ran up to 64 and then fell all the way to 29. And if that's going to happen again, where we run up now to, let's say, 120, 130, and then retrace down to 40 or 45, we need to be prepared. We need to have high conviction. We need to not panic sell. The losers of this moment are those who panic sold, and now they're trying to scramble to time their entries back in at 43. Then they get liquidated on a leverage position. You're just getting smacked from left to right. So it's really important not to try and time the market. And this is coming from someone that's experienced, who have seen these. Particularly if you're new, do not try to time the market. Find your high conviction plays, build your conviction in it, look for fundamentals, look for good retracements and pullbacks for entry points, and then let your position build out over time. Hope you guys enjoyed this video. As always, if you appreciate this type of content, smash up the like button and subscribe. As always, check out NordVPN, link in the description. If you're not staying safe in crypto, make sure you sign up for a VPN with NordVPN. They've been kind enough to offer this community 70% off 24-month plans plus a month for free. Okay, so it's an absolute no-brainer. Make sure you're staying safe. Make sure you've got your anonymity in place whilst trading crypto, whilst using your exchanges, using your wallets, playing around in the metaverse. You need to make sure you get that set up. It's not worth the risk. As always, thanks for watching, guys. We'll see you in the next one.